Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys, let's take a look again at euro currency. So as you can see by the price action yesterday and today as well, it seems that our suggestion was correct concerning the perspective of the United States economy. So indeed Jay Powell said that rates still are too low for normalizing situation in the economy, and it was some really new input that a lot of Fed members suggest and assume that rate will be increased through the 2019. I just would like to remind you guys that in the weekly report, when we talk about the perspective of the rate changes, we have mentioned the Fathom Consulting opinion that they suggest that rate will be increasing till the 2012. So that corresponds to the Fed members' sentiment. Although for the most traders, most people, this was a bit surprising because before the statement, nobody expected that rate will be increased 3 times in 2019 and maybe 2-3 times in 2020. So that was that was really significant information, and I think that market is not yet totally priced in it. So although reaction has followed in favor of United States dollar, but it doesn't correspond to the scale of these comments, and I think that we probably will see a bit deeper reaction on the euro currency. So on the daily chart, guys, you can see market is coming to a MACD predictor line. It will be flirting today with it. It means that theoretically we could get the bullish grabber. That if it will be formed, it will suggest the taking out of this top. But to be honest, guys, I would bet mostly on the further continuation today down, and for me, more chances that no grabber will be formed today. So, but we will see by the day close, because as I said, the fundamental background is really strong for United States dollar, and currently investors will start to think about it, and when they sleep with it, with these new comments, new inputs from the Jay Powell through the weekend, probably some more maybe stronger action will follow. But it's strong enough to trigger just 30% retracement that we have talked about yesterday. On the 4-hour time frame chart, guys, right now we have this a bit steep nervousness APCD pattern because all of them stands on reaction. The spikes up, as you can see, reaction on the Fed statement. But take a look what has happened. We have the ABCD. First target has been hit. This OP extension. It creates the agreement with the 117 area. But drop to it was really fast. It's just one candle right to the OP. It significantly increased chance that market will proceed lower to the XOP. XOP, guys, actually mostly creates an agreement with our first destination point on the daily chart. This is confidence support on the 4-hour time frame, 1618, 1635, XOP 1650. All of them stands relatively close. That's also monthly pivot support one. But if you'll take a look, that's precisely the 30% that we are waiting for. And I think that's chance that it will be hit really not small. Maybe here we will see some minor retracement on the lower time frames, but chances stands in favor of the downward continuation rate to the XOP, at least to the XOP, because we said on the previous videos that 30% will be just minimal target. Would not exclude chances that market still will form the reverse hand shoulders on the daily and could drop to the 50% as well. But currently we have extension, we have the target. This target has not been hit yet, and we're watching for that. Besides, today is Thursday. These 2 sessions will be enough to complete this downward action. So on the hourly chart, you could see our hand shoulders that we have talked about, or something like the hand shoulders. Here's what was a bit nervous action. It's reaction on the first Jay Powell words spike up. But in general, the idea was not really bad with these hand shoulders. So taking into consideration the classic target, the hand shoulders from the top of the head to the neckline, counted from the neckline to the downside in the point of the breakout. This again leads us approximately to the same 1650 target. So market also stands at the confluence 117. You can see on the hourly chart this is also confluence support. So what we could do here, if you have the shorts or you have taken shorts based on our hand shoulders recently, or you have taken shorts here in the beginning of the week, as we said, keep them. Just move your stops to the break even and don't forget to move your stops. So for example, right now if you're taking position here or something here, you could move stops somewhere above this consolidation, so somewhere in this area. Also you can see that was our second confirmation yesterday on the first leg down, as trend line has been broken. And as I said, keep watching for this sign. If it will happen, market will proceed lower. So indeed that has happened. So others who do not have shorts, and if you would like to take the scalp short, you have only one choice, is just wait for some clear bullish continuation pattern here on the hourly chart, or maybe you will drop to the 50-minute chart and see something there. Maybe minor double repo buy will be formed here on the 15-minute chart and the 5-minute chart that could trigger retracement back. Maybe here we will get some kind of the garter cheaper to sell. So this is the common stuff that usually we are watching for when we would like to take the position when downward action already has started. But currently, guys, on the euro currency situation in the short-term perspective looks bearish, and I suppose the chances to see market somewhere around 1630, 1650 is really significant.